What's up everybody? Michael and Coco here to do some technical analysis on the S&P 500. We're going to be looking at the daily time frame and the 30-minute time frame, mapping out some support, resistance, talking about this pattern that we're still in, and anything else that Coco finds. Let's get into it. Welcome back. We are here on the daily time frame for the SPX, the S&P 500 index, and today, woo, confetti, we close at an all-time high at $3,389.79. Thank you for those that participated in my little poll. 261 votes came in, and the question was really if we're going to be closing above the all-time high today or closing below it. 43% said we will be closing above it, and 57% said we will close below it. Now, these votes came in little throughout the day, and they could have seen the S&P 500 taking quite a nosedive within the first hour and a half of trading. So maybe that forced everyone's vote to close below the all-time high, but the bulls definitely stepped up and made it above the all-time high, closing there. So what do we got going on today on the daily time frame? Well, really, we are still trading within this rising wedge pattern, keeping a close eye on it. In bullish context overall, we've been saying that this is a buy the dip, sell the rip type of market. Does look like it might be getting to the point where we might see some sort of a pullback. Don't necessarily know if that's going to mean that we're going to be seeing this gigantic crash or not, but worth noting that we do have this volume accumulation percentage indicator down here, which I went over yesterday with a link in the description on how to apply this to your charts, but we are seeing the volume starting to dip down while the price is still heading up. This is a negative divergent, and we're seeing the volume dip. Now, if it goes into the red, the negative below zero, that would be a cause for concern, especially if the price continues to move in the upwards direction. Coco's getting wiggly, so I'm going to go ahead and put her down. Say bye. Bye. If this market were to suddenly take a turn for the worst, we would be looking here at 3,200 is the level that I personally have been keeping an eye on for that buy the dip moment. The reason why I'm bringing it up again right now is because of the 50 period moving average is sloping up into that area, giving it more support. So if we do get a sudden pullback to the downside, that 3,200 looks like a strong area to buy the dip or set yourself up for a very good risk versus reward trade. Now, in yesterday's video, towards the end of it, I talked about on the 30-minute time frame, a good risk versus reward trade, and I ended up placing that today. If you follow me on Instagram, I posted on my stories ahead of time and then took the trade, resulting in about a 12% profit on my small account challenge. So about $95 within just about 10 minutes. Post a little screenshot right here. Kind of cool. If you don't follow me on Instagram, it's at Figuring Out Money. Come by, say hi. Now what I want to do is bring us over to the VIX chart to see how the falling wedge is taking place and if we might potentially here see a breakout in the near future. All right, we are here on the VIX, which is the volatility index for the S&P 500, and the pattern that I want to point out here is this falling wedge, which is a bullish type pattern. If it does break out of this pattern, I'd expect it to reach right around this 40 to 45 range here on the VIX. Now, when the VIX goes down, you typically see the S&P 500 go up, and when you see the VIX go up, you see the S&P 500 go down. When it had this falling wedge right here and then broke out to the upside these 3 days of trading, we saw increased volatility in the S&P 500 during that exact date on June 11th. Now, what do I expect to take place? Well, the VIX usually fills gaps, and this right here is a nice big gap window on the VIX. So I would expect the S&P 500 to rise just a little bit more, and when the VIX comes down to this 18.2 range, which means it comes down just a little bit more, then I would expect that to act as a level of support, and potentially then at that point, we'll see the breakout to the upside up to that 40 to 45 range, which would increase the volatility in the S&P 500. It's something to track and be very aware of, because if we do start seeing a breakout on this, you want to start hedging your long positions and or putting stronger stop losses in place. In today's trading day on the VIX, you saw that the wick, if I zoom in here, started rising up fairly quickly and then got rejected by this trend line and started moving more to the downside. During this move to the upside, which was around the first hour and a half of trading, we saw some pretty aggressive moves to the downside on the S&P 500. Let's go ahead and hop into the 30-minute time frame to map out some supports and resistance for tomorrow's trading day. All right, we are here on the 30-minute time frame. This blue vertical line going down the screen right here represents where the day started, and every candle after that point represents 30 minutes of data. What took place today? Well, we had a gap and go all the way up to $30,395, and then it quickly got rejected in the first 30 minutes, creating this really big reversal type candle. And then we had some continuation on this reversal candle all the way down to the gap fill, which is what I talked about in the previous video, stating that if we get a pull down to this area, it would offer up a good risk versus reward trade where you can enter in right up here and then have a tight stop loss and then move to the upside. My trade specifically, I got in right here and I got out right around here, which was an area of support that I previously mapped out, and once support's broken, it then becomes resistance, so I got out of that position. And then throughout the rest of the day, we saw a nice move to the upside, and now it's kind of creating a little bit longer upper wicks, moving, kind of curling over to the downside. So what we got to do now is map out some supports and resistance to know what we're in for tomorrow's trading day. The first thing that I want to map out is an area of support, and that's going to be exactly where we mapped it out prior, which was right here at this 3372 level. And then as far as resistance goes, we're going to go ahead and put it up here at 3395. I'm going to make that red for now, and then the next level is going to be 3400. That is just a round number. It's a psychological number. What I plan on doing tomorrow is bringing out the Fibonacci extension tool to map out new levels, because we're in new territory, reaching new record highs potentially for multiple days in a row. We will see. As far as any other levels of support go for more intraday, let's go ahead and map out one more, and I'm going to put that right here at this level. And the reason why is because we had it act as resistance through here. We had the gap above it and it held until it broke down. And then we tested it on this candle as support, and then the last 30-minute candle as support as well. So this 3,386, you can call it 3,385. I think that's what we did yesterday too. Looks like it's going to act as some sort of important level going into tomorrow. So that is an area of support, two areas of resistance, and then this more major term one right down here at 3,372. As far as trade plans go going into tomorrow, I'm quite uncertain at this particular point in time. If something comes up midday, I may just post it on my Instagram stories. But right now, I feel a little hesitant to go over a trade plan. One that stands out obviously is if it comes back to this green level of support at 3,372, you can do another risk versus reward trade. But keep in mind that we've already tested that level once. So if it tests it again, it has more possibilities of potentially moving more to the downside. So if we do get a pullback there and you want to have a tight stop loss, by all means, that is totally applicable in this situation still. I just don't like it as nearly as much as the first original gap fill, because when windows are closed, they typically act as an area of support and or resistance depending on where the price action is trading. Now, if we gap up tomorrow and make it above 3,395, what you might see is something like this, where we start moving up higher and then potentially back test this level of 3395. If we get a back test here, that could potentially offer up a good risk versus reward trade where you could enter in and then have a tight stop loss, because it acted as resistance really strong here and throughout here. So if we get a break above it, once support is broken, it then becomes a level of resistance. So that might be a potential move as well, but I'm going to wait till tomorrow to really identify or put on any specific trades, because nothing at this particular point in time makes me jump off my seat like there's something perfect going to happen. That's all I have for you on today's S&P 500 technical analysis update. I will see you back tomorrow.